Hi everyone, and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I'll be taking you through the key events that I believe will be driving your investments in the coming days. Now, moving into this week, certainly the Ukrainian presidential elections have been on the minds of traders, and the subsequent election of Poroshenko as the new president of the Ukraine has been met with fairly decent reaction from Russia. Actually, they have opened negotiations over the outstanding gas contracts that they've got still to be negotiated, and it seems as though that is a positive step, certainly. However, there is still fighting that continues in the eastern part of the country, and that has certainly got the potential to add to investor concerns as time goes on. Now, into this week, there's not a great deal of data that's going on for traders to get too worked up about. Vast majority of the key data is all US based. However, moving towards the end of this week, it does tend to be, with the last week of the month, it does often end up being a quiet week that ties up a few loose ends, and I think that is pretty much what we're looking at this week. In due of that, I've shown here the US 10-year yield, which is still trading around key levels. It's had a bit of a recovery in recent sessions, but it still remains as though investors are concerned with the state of US growth, and it suggests that any sort of future growth in the country is still yet to be to find a lot of confidence in the bond markets, at least, and that suggests that is what the 10-year is suggesting at the moment. So just that is certainly one to keep an eye on, due to especially the fact that equity markets are still trading around all-time highs, and you'd imagine with the this great rotation that we're supposedly seeing in stocks and equity and the bond markets, that the US 10-year Treasury yield would be considerably higher than it is at the moment if the market was trusting of that move. So certainly one to keep an eye on there. In terms of forex markets, you've got you've had a considerable dollar rally in the last few days, up to 84 spot 2, I think it is, on the dollar index, and this is it's back at levels that it's around about 2-3 month highs on this dollar index. So it has been testing these levels over the last few months, but has corrected back recently. Now that is going to be a key test for this dollar rally that we've seen in the last few days, and certainly today, it's on Tuesday, it's certainly showing signs of rolling over once more. The dollar has been under pressure throughout the session against the major currency pairs. The euro has, as I said, recently been testing that 36.70 key level. That's now broken. That confirms a big top pattern that we've been talking about for a while now, and that actually gives us an implied target of 33.75 on the downside. So it looks like the euro is ultimately now going to be correcting backwards. It's found a little bit of support in the last couple of days, but I think that's just a near-term technical rally back towards the neckline, which comes in around, as I said, 36.70, but also you've got resistance up towards 37, which is where the 144-day moving average is currently trading around. So I'm expecting this near-term technical rally to be sold into on euro dollar. In terms of sterling, the chart actually remains fairly strong still. The positive UK data continues to come through, and that has been supportive of cable in the last few weeks. It has got a positive outlook, and it's formed support around $1.68 again, just above there. So if it can hold above that 68.10 mark, then we can start to think back about moving towards the highs once more. In terms of dollar yen, the uncertain outlook has been pushing down towards the well, it actually hit a low of 101.80, 100 spot 80 last week before a bit of a rally that set in, but it's now back towards the pivot level around 102, and that marks once more a bit of an interesting junction for the dollar yen chart. And certainly, if that 102 mark remains intact and traders continue to sell into that strength, I think we'll be seeing pressure back down towards that 100 spot 80 mark again, which was the key low that just came in above that 100 spot 74 February March low that we saw previously. In terms of equity markets, the equities actually have sustained a very a strong push higher and actually look to have broken out once more. But can they actually sustain this move with earnings season coming to an end? It still seems as though that M&A activity is pushing these markets higher. There's not a huge amount of positivity that came out of earnings season. Fairly disappointing in some quarters earnings season, and whether these markets can maintain these breakouts or not. The S&P has broken above 1902, which opens the next immediate upside target of 1950, but certainly the magic 2000 level will be the next one that traders can talk about if it holds above that 1900 mark. As I said, you've also got support around the 1850 to 1860 area, where there's a significant amount of moving averages support, uptrends, and also price support as well. So that's strong for the S&P there. FTSE 100 is a lagging market at the moment. It's certainly lagging the European peers anyway, and it's still yet to test its key resistance, which is the 68.94 mark, which is a 14-year high on FTSE, and we'll still wait to see whether that happens. The DAX, for example, has outperformed the FTSE once more, and it's broken out to another all-time high above the 98.10 level, which has been holding it back in recent weeks, but now it's solidly through that, and looks like it's pushing on. Now it needs to hold above that 98.10 mark to sustain that breakout and to start to look to build on this breakout in due course. In terms of gold, it's still trading in a very tight range. It's still a very difficult chart to trade on an intraday basis, but also a daily basis, because you continue to return towards this 1290 mark. You have dips higher, dips lower, and moves higher that continue to retrace back towards 1290, and it's still trading in a range between 1277 and 1316, and it's not really making too much headway either way. So it's a very difficult one to trade at the moment. Maybe now these Ukrainian elections have been passed through fairly uneventfully, maybe then the Ukrainians can start to negotiate properly with the Russians, and maybe that will take a little bit of the war premium potentially out of this chart. But certainly today there's been a bit of a downside shift in gold, and whether that continues or not will remains to be seen. But certainly at the moment there is yet to be any sort of conviction breakout on gold, and it's very much a sideways chart. Okay, so in terms of outlook for the rest of the week, as I said, there's a whole raft of US data. You're starting off with the durable goods and consumer confidence today. Durable goods will be certainly looked at in terms of because retail sales have been fairly disappointing in the wake of the winter activity, the winter related cutting of economic activity, which resulted in the GDP number coming in 0.1% up on just slightly up on the quarter, and that takes us on nicely to US growth, which is you've got the second reading of US growth. It's actually forecast to come in slightly negatively now, 0.5% down on the quarter. So actually in contraction mode for the quarter now expected on US growth. Jobless claims as well would be important, and also pending home sales as well, because the housing data in the States has been mixed of late, and we'll see how that improves. Moving on to Friday, you've got Canadian GDP and University of Michigan sentiment. Okay, so that's pretty much all we've got to look forward to this week. Next week is going to be a massive week for the market. We've got the Eurozone inflation. You've also got the ECB ECB press conference and monetary policy, which the market will be massively looking out for possible possible announcement of monetary easing. And also you've got non-farm payrolls and all the jobs numbers as well. So a huge amount for investors to look out for next week, and that might result in this week being just a little bit more quieter than normal, especially in light of we've also got on Thursday, we've also got some European bank holidays as well to look out for Germany, France and Switzerland as well. So it might be a touch quiet towards the end of the week. Anyway, I wish you good luck in your trading throughout the week, and I will speak to you next week. Thank you very much.